Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the latest news updates regarding Tesla's TSLA shares. We're going to be talking about how Tesla stock is trading below its S&P 500 inclusion price as investors worry about Elon Musk's Twitter deal and a bearish death cross. So we're going to be going into detail about what all of that means. Then we're going to talk about how Elon Musk is no longer part of the $200 billion club as Tesla's stock continues to slide, but he's still comfortably the richest person in the world as of right now. Then lastly, we're going to do a follow-up on my previous video that I posted a few months ago about the Tesla stock split, which I predicted literally a long time ago. So I'm going to keep you all up to date on the latest Tesla stock split news, what this means for shareholders, and how this is going to impact the TSLA share stock price. So for more videos on Tesla, remember to go and smash that like button right now, comment your thoughts down below about any of these news articles, subscribe if you are new, and without further ado, let's jump right into today's stories. I also want to say that Webull, which is a brokerage platform where you can buy and sell stocks and cryptocurrencies, is having a huge deal and they are offering you free money right now. What do I mean by this? If you click the link in the description down below, you can sign up for Webull, invest $100 into any stock that you want. I personally would invest my $100 into ticker symbol VOO, and they are going to give you 6 free stocks, and you are going to be entered in to win $12,000. So this is literally a win-win scenario, and here's what I mean by this. You can go to Webull by clicking the link below, investing $100, buy ticker symbol VOO with your $100, you get 6 free stocks, which is free money. You can then liquidate those stocks and sell it, pull your money out, and you will still be entered in to win $12,000. So this not only gives you free stocks and free money, but it also gives you a chance to win thousands of dollars. So if you're interested in that, remember to go and click the link down below, sign up, invest $100, and I wish you the best of luck. So Tesla, if you didn't know, is an electric vehicle manufacturer, and they also do a plethora of other things, and their market cap absolutely squashes any other vehicle maker as well as any other electric vehicle manufacturer. Right now, the current TSLA stock price is trading at around $627 because the stock price has been declining very aggressively lately. However, we do have 3 price targets among professionals that range anywhere from $800 on the low end to $1,620 on the high end, with the average price consensus coming in at around $961 for a 12-month price prediction. So all of this actually looks pretty bullish and positive for TSLA shares. So does this mean that we should start buying the TSLA stock price right now, considering that Tesla stock literally fell by around 6% recently, which was absolutely huge? Like we said earlier, the current stock price is trading at around $627, and it has been declining in price very aggressively, and right now it's actually trading lower than its price when it was originally included in the S&P 500 index, which was huge news back in the day. Tesla was added to the S&P 500 on December 21st of 2020 at a share price of around $695 per share. However, clearly now the stock price is trading significantly below that stock price. So does this mean that we should start buying up and adding more TSLA shares to our stock portfolio? Well, it depends. Right now, Tesla, as well as the overall stock market, is in a huge sell-off, with the Nasdaq 100 index officially entering into bear market territory, as well as the S&P 500. For Tesla stock in particular, the company has declined in their stock price around 39% year to date, and it's trading below 50% from its record highs. This decline has come from not only the broader stock market sell-off and macroeconomic factors on top of investors selling aggressive growth stocks and technology stocks, but also because of the CEO of Tesla, who is Elon Musk, getting wrapped up in Twitter drama because he has a $44 billion deal to acquire Twitter. However, we've been following this story, and one of our favorite analysts from Webull, who is Dan Ives, actually called this whole thing a circus. Dan Ives says, and I quote, "This circus show has been a major overhang on Tesla's stock and has been a black eye for Musk so far, how he has handled this spiraling situation in our opinion." He goes on to say, "We believe with the Twitter shareholder meeting on the horizon and approval for the deal expected, Musk is facing a fork in the road situation in which he has to decide decide his next step in this soap opera, as Tesla investors' patience is wearing very thin. So Dan Ives is basically saying, even if things go very well for Twitter and Elon Musk acquiring it, this is not very good news for Tesla investors. More bad news for Tesla's stock is that they are about to enter the death cross, and this is a very bearish negative signal that is talked about very frequently in technical analysis. So if you don't know what this is, don't worry. Basically, the death cross is when the 50-day moving average for the average stock price in the last 50 days falls below the 200-day moving average, which is not a good sign. Once these two things actually cross and the 50-day moving average is lower than the 200-day moving average, according to their average stock prices, this means that Tesla and their TSLA shares are going to go on a major downward spiral regarding their overall stock price. So we clearly do not want that. Also, Elon Musk has pledged millions of Tesla shares as collateral for his deal to purchase Twitter. An analyst from Bernstein says, if the Twitter deal were to close today and subsequently Tesla's stock price dropped to $350 to $400, Musk could be forced to sell approximately 13 million Tesla shares. End quote. So this analyst literally does not think this is going to be very good for the TSLA stock price, because if he sells Tesla shares as collateral, this is going to affect the TSLA stock price very negatively. Now, clearly, I don't think that's what he's actually doing. I think he's just borrowing against his Tesla shares. But if this were to happen, this is really not going to be good for Tesla shareholders. So it begs the question, is now a good buying opportunity for the TSLA stock? Well, I personally only like to buy Tesla below $500. My average cost for the TSLA stock is well below $500, and I don't intend to average up my cost or my average cost basis in a time during market volatility such as we are experiencing right now, especially from a technical analysis standpoint. If the TSLA shares do enter that death cross where the 50-day moving average starts to trade below the 200-day moving average, which means that the TSLA stock could continue to fumble and fall downward. So clearly I'm going to wait for a better deal, but overall I do love Tesla and I think they are a phenomenal company. Speaking of which, the TSLA shares, as they start to tumble downward, this has negatively impacted the value and the net worth of Elon Musk, where he is no longer a part of the $200 billion club. Elon Musk's net worth dropped by around 5.4% down to $193 billion as Tesla's share price continues to fall, according to Bloomberg. This means that he lost around $11.1 billion in just a single trading day, which is absolutely absurd. Elon Musk's net worth is now trading at one of the lowest points it has since last August, and this is according to Bloomberg's Billionaire Index. He also lost just under $78 billion this year. So as the TSLA stock price continues to trend downward, this is making Elon Musk absolutely bleed money. However, he is still comfortably the world's richest person, because Elon Musk is still around $65 billion than Jeff Bezos, who has most of his wealth over in Amazon. So, although Elon Musk is technically losing loads of money as the TSLA shares drop further in price, he is in no way in danger of losing that top spot of the richest man, or rather the richest person in the entire world. This, I think, somewhat offsets the bearish negative naysayer article that we just looked at about Twitter shares. Because although, yes, if he does sell TSLA shares to buy Twitter, or even uses them as collateral to get a loan out to buy and purchase Twitter, this is really not going to negatively impact much. I think the share price is definitely going to bounce back even if it does go down, or based off of this news, we could even see a positive catalyst causing both Twitter as well as the TSLA shares to increase in price, at least temporarily. So I think this is overall very bullish positive news in the long term, and I personally really like Tesla and what they're doing as a company because, like I said earlier, they are much more than just an electric vehicle company. However, while Tesla shares have dropped more than 40% year to date, what catalyst is it going to take for the TSLA shares to jump back on track? Well, first I would say that the overall macroeconomic environment would need to change from a bearish negative bear market, and it needs to start to rally again and solidify that rally and that uptrend. Because right now, investors are absolutely starving for any type of good news which could potentially cause a rally. Because right now, with high inflation, fears of a recession, the stock market entering into a bear market, and rising interest rates, this has absolutely crushed assets such as the housing market, the cryptocurrency market, as well as the stock market. So for the TSLA shares in particular, a good catalyst that could cause it to surge would be another stock split. Now, we've talked about a potential stock split months ago where I predicted that Tesla will indeed undergo another stock split. However, I don't think it's going to happen relatively soon, because normally you would want to split the stock when the stock price is absurdly high. But even trading between $400 and $600, you could still technically do a stock split, even though I don't think Tesla is going to perform a stock split until Tesla shares are consistently above $1,200. However, with that being said, there is still a chance that the company could perform a stock split, because this Motley Fool author does seem to think so. He says that Tesla's next investor meeting will take place in early August, where they will likely vote to authorize an increase in share count, and that would pave the way for a future stock split. And I actually tend to agree with him. However, like we said earlier, the stock price isn't high enough for me to justify a stock split. Honestly, I think it's actually good that the TSLA shares are dropping, because it's lowering Tesla's overall market cap, because they were trading at around $1.2 trillion, where as of right now they're trading below $700 billion, and I think that is much more digestible for investors. We don't want Tesla to get out of hand where they are so overly valued that eventually the stock is going to come crashing down. Pullbacks, market cycles, and corrections are just a part of investing into stocks, and investors, if you are new, you need to get used to this, because this is just part of classic market cycles, and this is actually very healthy. The better news, though, is that Tesla has increased their revenues and profits very aggressively over the last decade, and let me put this into perspective for you. In 2012, Tesla posted sales of around $1 billion. However, in 2021, Tesla reported around $53.8 billion worth of total revenue. So they are very aggressively and rapidly increasing the revenues as well as their profitability. And this is why the TSLA shares are trading based on their future expectations and not what they are worth right now. However, with that being said, I still do believe that this pullback is going to be very healthy for the stock over the long term. Tesla, I believe, will maintain their dominance in the rapidly growing electric vehicle market, and this gives them a huge total addressable market. Tesla was literally the 8th most purchased stock by retail investors in 2021, and I anticipate this trend will continue to increase, where Tesla will maintain a top 10 spot among the most popular stocks, or the most frequently bought stocks among investors, particularly retail investors like you and I. Now, what we do need to watch out for is that Tesla is absolutely filled with amateur investors, which means these investors have not been investing over 5 years. These investors are not technically even real investors, they're more like traders. They're trying to time the market, they don't understand market cycles, and they think that the stock price falling is inherently a bad thing. However, more experienced investors know that when the stock drops, this is the best time to buy the company, because not only are you getting a phenomenal discount on the stock, but when inevitably the stock starts to appreciate again, you're going to make loads more money, rather than if you were just to invest and the stock price continuously increases. So these pullbacks are not only healthy, but they are also very good, and they're a fantastic buying opportunity for experienced investors. However, with that being said, if a stock split did take place, I think this would act as a phenomenal catalyst, which would artificially increase the overall stock price, because it would invigorate newer investors to think that this would be a phenomenal catalyst. Now, on an equity basis, this does not technically change the market cap of the company, and it doesn't fundamentally change anything about the company or stock. It just creates a perception of a cheaper stock, even though the company is still worth the exact same. Nonetheless, though, this is still going to create a phenomenal catalyst in the short term, if indeed it does come true. Another thing that this would help with would be for options investors. So by lowering the stock price, it's going to make stock options and option contracts more digestible, because options contracts are purchased in sets of 100. So a $700 stock would require a ton of capital for just a single trade, close to around $70,000. So by lowering the price of each stock, this is going to make options contracts much more appealing for investors. So that could be a very positive spark that Tesla stock needs during this time of market volatility. I also want to mention that in a previous video, we went over why Standard & Poor's removed Tesla from their S&P 500 ESG index, which was absolutely a terrible move. The ESG index takes the environment into consideration, and to remove a company like Tesla from that type of index was a very poor decision in my personal opinion. So this would just add to the negative sentiment regarding Tesla stock. But overall, I would say not only is Tesla a strong company, and as the stock price falls, it just becomes a better investment. So be on the lookout for a potential stock split. If you do own TSLA shares, remember to go to that investor meeting in early August. And remember to exercise extreme caution right now, because the stock market is experiencing major downward momentum. So with that being said, I would love to hear your thoughts down below about Tesla stock, Elon Musk, Twitter, and the potential stock split. Remember to go and smash that like button right now, subscribe if you are new, and I will see you in the next YT video.